Welcome to another video. Today we're going to be going over a trade that we took last week, and we're going to be talking a little bit about how we are going to handle this next coming month, weeks, and days. So let's get right into it. So as you can see, we are on a 1 hour chart right now, and you can see that we're in a 4-hour demand zone. So we entered that 4-hour demand zone Tuesday the 28th, so the day before. We took the trade on Wednesday the 29th. So we got this 1 hour and 4-hour demand zone. And when I first got to the market, I saw that we were in the demand zone, and so I was thinking, hey, we're going to take some buys. One thing that I changed last month to the previous months is that I was using higher time frame zones to take trades out of. And I think the biggest issue was I was going from a higher time frame zone and pretty much just dropping right down to my entries time frame and waiting for breaks of structure, which is not a good idea. Because why should we be taking say we come to a demand zone like this, why will we be taking buys off of a 5-minute signal? Doesn't really make any sense to me. Now that I see it, we should have been waiting for a 15-minute or a 1 hour break of structure to target the 4-hour previous high. So that's one thing we're going to be changing, is paying more attention to price action. And so right now we're on a 1 hour chart, and I had marked this out right here. This red line is pretty much, if we want to take buys, is at this moment is we need to see a break of structure here before we take buys up. Now, depending on the distance between this break of structure and this high, which is a 4-hour high and a 1 hour high, would also determine whether or not we would take buys in that area at all, because it could just come up and come right back down. So after looking at this for a minute, we are in even though overall we are trending up, at the moment we are bearish. We came down, yes, we broke structure here, but as we're looking at the chart, when we open it up in the morning, we are starting to come back down. And so this candle, black candle, is a 8 o'clock candle. So let's just go on forward, and it's still an 8 o'clock candle on the 1 hour. So let's go down to the 15-minute. So we ended up taking a 15-minute supply setup. We were looking at this. Let me see. We were looking at this 5-minute supply zone right here at first. So before market open, we pushed down into our 4-hour zone, which this really, we need to be aware of it, but that's not going to really determine what trade we're taking, because at this moment we are trending down. So we really should be looking for sells. So we marked out this 5-minute at first. And then market open, and we started to push right back up. So initially you would think, okay, hey, we're taking buys because we are pushing up as soon as market opens. But like I said, I would like to see this structure point be broken, and actually I would probably move it up here. Want to see this broken before I even take a buy on the position, because I would really want to see that it is actually going to go back up. So, but then, and yeah, see, look at this. So this is a high up here. So even if we were to break above this, I probably wouldn't even take a buy at this level, because this right here is not enough of a movement for me to even risk trying to take a buy. So as it comes back up, it busts through our 5-minute, which is cool. We're on a live account. Most of the time I take 5-minute zones on the prop firm account, but since I'm on my live account, the higher the time frame, to me, the more confident I am in taking that setup. And we have all day, night, whatever for it to play out. However long it takes, we have that amount of time because we don't have a limit to where we have to close our trades at the end of the day. So we tapped into this 15-minute demand zone, supply zone. And then we started getting some rejection out of here. Some strong rejection. Tapped in, strong rejection. And we're going to go back down to the 5-minute. So drop down to the 5-minute just to see, give me a little bit more confidence, confirmation that, hey, we're probably going to sell back off. And as you can see, rejection, big bearish candle, and then pretty much right at this bearish candle, break of this like blue candle right here, this really tiny blue candle. And we put our stop above that 15-minute supply zone, and then we targeted the bottom of that low. And so we'll play it out just so you can see what happened, and we hit it by noon. And for those of you out there that are having issues determining direction, especially the ones that have been trading for a decent amount of time, I'm sure that you come to the chart some days and you're just like confused on which direction you want to go, and then you start questioning yourself, like, do I even know what I'm doing? And the answer probably is yes, you do know what you're doing, because you've probably had those aha moments where you came to the market and it just like clicked, like you knew which direction you were going, you saw your setup and it just looked perfect. And realistically, those are the type of trades you should be taking. I don't know who it was, I heard someone say that whatever, like the trade setup that you could imagine, the perfect trade setup, those are the only trades that you should be taking. So when it comes to doubting yourself, that's just like part of the learning process. We really shouldn't be doubting yourself, because you probably do know, you've seen it, you've had it multiple times, but then you come to the market and the issue is you want to trade. Therefore, even when the market conditions are not good, you are still trying to find trades, and you may not know which direction it's going, but it's not because you don't know which direction it's going, it's because the market is just not a good market to be trading right now. It could be choppy, that's why you don't know which way it's going. So instead of beating yourself up and then taking trades that are just crappy trades and taking losses, just remember those aha moments. And when you come to that market, if you come on the charts and you don't know which direction you're going to go, then you should not be trading that day. You should just wait, come back later, and see if it shows you which direction it wants to be going, and only trading that direction. Now you could say, okay, well, depending on this, I'm taking this and this and taking this. You could do that. I'm trying to refrain from doing that. So that way I don't end up confusing myself and having too many options. So if I can come to the market and say, hey, this is what it's doing, I'm only taking sells, well then if I don't get a sell position, then I'm just not going to trade that day. Especially when you're starting out, I believe that we should stick to our bias, and the reason being is it's going to show some like obedience and keep you from taking crazy trades. And some people might go against this, but I think as a beginner that's probably very important to do, because if you can come to the market and see it and you're like, oh hey, it's selling off, so I'm only going to be looking for sales at this point, then you don't have to worry about if it's breaking this or breaking that, then I'm going to take a buy, so it's just so I can take a trade. No, you come, you say, oh, it's bearish, okay, well, I'm only going to take a bear trade. If it don't show up, then guess what, I'm just not going to trade that day. That's money in your pocket, because that's money you didn't lose. And yeah, you could win the trade, but you're also taking a chance on that happening. So, and my focus is I'm going to be looking at higher time frames, because I'm trying to figure that part out with the 4 hour, 1 hour, 15 and 5 minute, and trying to correlate those. But I might get rid of the 4 hour. I might look at the 4 hours just to see where we're at. But I think I'm going to be focused more on the 1 hour, the 15 minute, and the 5 minute. So looking at 1 hour zones, and not necessarily trading out of those zones, but just being aware of where those zones are at, and then looking at the 15 minute to get my real direction, and then the 5 minute also obviously my entry. So that's something I kind of do with my swing trading is I align the weekly, daily, and 4 hour, and occasionally I'll go down to the 1 hour to try to get a better entry. But if I don't have my 4 hour and my daily aligned in the direction that it's showing me that it wants to go, then I'm not going to take a trade because then I'm basically counter trend trading. And so I want to see my 4 hour and my daily going. If it's going to buy, then I want to see, say the daily's, you know, bullish, but my 4 hours bearish. Well, then I want to wait for that 4 hour break of structure so that way it turns bullish and I can take a trade. That way they're aligned. So I kind of want to implement the same thing into my day trading with the 1 hour, the 15, and the 5 minute. So that's a little bit of a plan. It's good to have a plan. If you don't have a plan, I would suggest you sit down, figure out a plan, figure out what you want to do, figure out what instruments you want to trade, how many trades you want to take a day, how many trades you want to take a week, and have that wrote down or at least in your head. And that way you can at least stick with that because that's part of your trading plan is to be aware and have a plan of what you want to do. Because before I was kind of just, I was thinking I was doing pretty well and I was just taking setups, but I really didn't have a plan. Like I said, I was trading like 5 different things. Whatever showed me that day, I was trading it. And I'd rather get to a place to where I could trade less things and then come to the market and either I take a trade because it's showing me and my setup's there, or don't take a trade. You got this. Y'all got this. It's not that hard, but it can be. And the biggest issue is us getting in our way, our minds. Maybe not so much understanding. There might be a little bit of that, but for anyone that's been doing it any decent amount of time, you do know what a good setup looks like. And when you come to the market, just don't beat yourself up if you can't figure it out. Because the thing is that it's not that you can't figure it out, it's just that there's not anything there for that day. So that's where we're at. That's what we're going to do. And I just appreciate y'all for watching. God bless y'all. Y'all have a good trading week, good trading month, and we'll see you next time.